Assalamu alaikum, dear student. Let's welcome to the third lecture on taxation. Third lecture. In the previous lecture, we did calculated income tax liability when the dividend income was there. This will be a small lecture because the prayer time is very near, namaz time, prayer times. It will be a small lecture, but a very important lecture. Actually, in this lecture, we'll be doing more practice how to calculate income tax liability. So directly, let us start with the question. Let's say we have non-saving income, obviously the saving income, and the final one is dividend income. The last column is of total. Fine. Assuming the non-saving income is 40,000, saving income is 20, and the dividend income is 15. So it will become 75. Okay. Obviously, the personal allowance is first deducted from the non-saving income, which is 12570. We will get taxable income. So 40,000, 40,000 minus 12570. The taxable income is 27,430. Here 20,000 and 15,000. It is 62,430. Let me recheck. So we should not be making any. I should not be making any arithmetical error. Okay. As we know that first we need to tax non-saving income. Income tax. Basic rate band, non-saving, 27,430 into 20%. 27,430 into 20%. I'm getting 5,486. I'm getting 5,486. Okay, now again I want to change the color. Okay. Now dear student, we need to tax saving income. Before calculating tax on saving income, let us see the amount of taxable income in the column of non-saving. Taxable income in the column of non-saving is more than 5,000. That is why starting rate band is already consumed. That's it. No more issue of starting rate band for saving income arises in this question. Now next question is of nil rate band for the saving income. Nil rate band for the saving income depends on individual's tax paying status. By looking at 62,430, we can easily decide this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of 500 for his or her saving income. So same applies in this question. Nil rate band saving income 500 into 0%, obviously 0. Now we need to check how much space, how much limit is left in the basic rate band. The limit of the basic rate band is total limit is 37,700. From this, we need to deduct 27,430, then deduct 500. Now let's see how much space in the basic rate band is left. In the basic rate band, still we have 9,770. Still we have space unused, limit unused in the basic rate band, which is 9,770. So basic rate band, saving income, 9,770 into obviously 20%. So 9,770 into 20%, I'm getting 1954. Okay. Now let us see. The total saving income, which is taxable, it is 20,000. Out of 20, 500 is covered in the nil rate band, and 9770 we have taken in the basic rate band. So obviously now the basic rate band is fully utilized because one portion of the basic rate band is utilized by the non-saving income, then little bit is utilized by the nil rate band, and the remaining is 9770 is already utilized by the saving income. So now higher rate band, saving income. Out of 20,000 saving income, we have already taxed 500 in the nil rate band, 9770 in the basic rate band. So the remaining amount of saving income now obviously falls in higher rate band. Dear student, from 20,000, which is the saving income, we need to deduct 500 nil rate band of the saving income, 9770 of saving income, which fall in basic rate band. 20,000 minus 500 minus 9770. I'm getting 9730. Obviously, the 9730 actually falls in higher rate band where the tax rate is 40%. I'm getting 3,892. Wow. Now, third income is dividend income. Dividend income is taxed on at the end of saving income. So the dividend income is number 3. But for dividend income, the rule is every individual, irrespective of tax being stated, gets nil rate band of 2,000. So out of this 15,000, nil rate band dividend income is 2,000 into 0% is 0. Obviously, the basic rate band is fully already utilized. So remaining dividend income obviously falls in higher rate band. From 15,000, you need to deduct 2,000, you will be getting 13. The tax rate for higher rate band is 33.75% in dividend income. So 13,000 into 33.75%, I'm getting 4,387.5. So with a little bit rounding off, you can write 4,388. And please, dear student, please, I request, don't get into this how much rounding off and this all. This rounding off is acceptable because the answer is 4,887.5. Whenever the 0.5 comes, then you increase the number which comes before the point, before the 0.5. So 87, we made it 88. So simply mathematical rounding off, we are following it. So 5486 plus 1954 plus 3892 plus 4388. So income tax liability is 15,720. Income tax liability, income tax payable is 15,720. Now let's see another question. Now let me introduce a little bit new something. Assuming we are having employment income 40,000. Okay, which is a non-saving income, we know that. And we have been given pay also. Pay as you earn. It is, let's say, 5,000. The requirement is income tax payable. You need to calculate income tax payable. Okay. What is pay? I'm coming to that. Don't worry at all. Employment income is a non-saving income, which is 40,000. From this 40, I'll deduct the personal allowance, which is 12570. I'm getting taxable income. So 40,000 minus 12570. So the taxable income is 27,430. Obviously, the entire 27,430 falls in basic rate band. Please, there's no need to make the column of total because it will be same. We have only one source of income. So let's simply calculate income tax. 27,430 obviously falls in basic rate band into 20%. So 27,430 into 20% gives me 5,486. Okay. So logically, the 5,486 is your income tax liability, but already this individual has paid tax of 5,000. Pay as you earn. That is called tax which is deducted at source. So when you are working somewhere, so logically they will be deducting the tax. So simply pay means the tax which is already deducted at source. Pay as you earn. You can say this is the tax which you have already paid in advance. So you have to deduct this amount. Basically 5486 is your income tax liability. Deduct pay. Pay as you earn, which is 5,000. So 5,000 tax is already being paid. So the remaining income tax payable is only 486. Income tax payable is just 486. You might be thinking, what if pay was more than 5486? Then it would have resulted in income tax refundable. Simply, if pay was more than 5,000 in the same question, more than in fact 5486 in the same question, let me explain. Let's say this is part A. With the same question, I'm assuming B, that payee is, let's say, 6,000, just an assumption. What if pay is 6,000, then how would you deal? Simply, you can say your income, we are solving part B, your income tax liability. We are doing the same question. I just want to show you one thing. What if the pay is more than the income tax liability? Income tax liability is 5486 in this question. Less the pay in part B, assuming it is 6,000. So this time pay is more than income tax liability. So result is income tax refundable. Now it is not income tax payable. It is actually income tax refundable. So HMRC will repay you. So the negative amount is actually representing that you will get the refund of 514 pounds. So whenever pay comes more than the income tax liability, then you will be having income tax refundable. So pay simply means the tax which is already deducted at source. Pay means pay as you earn. Pay means this tax you have already paid. And there are only two possibilities. One, the pay is less than the income tax liability. If pay is less than the income tax liability, so obviously you will be having income tax payable. If pay is more than the income tax liability, then you will be having income tax refundable. Let's see one more question directly. We have non-saving income, we have saving income, and we do have dividend income also. And finally the column of total. Dear student, I really want every one of you pause the video. Let me first write the question. I was too excited. Let's say the non-saving income is make it 25,000. Saving income is, let's make it 50, and dividend income is 10,000. Okay, and you just need to calculate income tax liability. Now I really want every one of you pause the video, attempt the question, and then you can unpause the video. So non-saving income is 25,000, saving is 50, dividend income is 10, so total is 85. Personal allowance is obviously first deducted from the non-saving income, 12570. 12570. I'll get taxable income. So 25,000 minus 12570. The taxable income is 12,430. Over here it is 50,000 and 10,000. I'm getting 72,430. Okay, now what? Let us calculate income tax. Let's calculate income tax. Basic rate band Non-saving, it is 12,000. Just a minute. Basic rate band, obviously 12,430. The entire taxable income falls in basic rate band, which is 12,430 into 20%. So 12,430 into 20%. That is 2,486. Okay. Now, again, let me change the color. Look at this. Taxable income in the column of non-saving income is more than 5,000. That is why starting rate band does not apply in this question. Simply, it is already consumed by the non-saving income. So whenever the taxable income in non-saving column is either 5,000 or more than that, then starting rate band does not apply. Now we need to check the individual's tax paying status. Look at this. Total taxable income in this question is 72,430, which is more than 37,700. So that is why this individual is a high rate taxpayer. Whoever is a high rate taxpayer gets nil rate band of 500 in saving income. So nil rate band, saving income, 500 into 0 is obviously 0. Now let us see how much space is left in the basic rate band. From 37,700, we need to deduct 12430 minus 500. The remaining limit in the basic rate band is 12430 minus 500. So it is 24,770 basic rate band saving income. 24,770 applicable tax rate is 20%. I'm getting 4,954. So we have fully utilized the basic rate band. So from this 50, you will be deducting 500. From this 50, you will be deducting 24,770. Whatever comes, that definitely falls in higher rate band. So dear student, from saving income, which is 50, first we deduct 500, then you need to deduct 24,770. 50,000 minus 500 minus 24,770 gives me 24,730, which definitely falls in higher rate band with the applicable tax rate is 40%. I'm getting 9,892. When it comes to dividend income, we know that every individual gets nil rate band of 2,000 irrespective of individual's tax paying status. Dividend income amount is 10,000. Out of that 10, 2,000 obviously falls in nil rate band. So remaining 8,000 now of this question actually falls in higher rate band because basic rate band is already utilized. So higher rate band, dividend income, which is 8,000 into that is 33.75. The applicable tax rate is 33.75. So 8,000 multiplied by 33.75, I'm getting 2,700. Let me check again. 8,000, 33.7. Yes. So here comes your income tax payable. 9,892 plus 2,700 plus 4,954 plus 2,486. The answer is 20,032. 20,032. Income tax payable. Let me recheck so that there shouldn't be any arithmetical error. 2,486 plus 4,954 plus 9,892 plus 2,700. Yes, it is right. So dear student, this lecture is a very small lecture. I just wanted to do a little bit more practice with you for income tax calculation of income tax liability. Now I strongly believe you should be having a really good grip. How do we calculate income tax liability? In the coming class, we'll be doing little bit more practice on income tax liability but I'm going to introduce new rules also, inshallah. So simply, thank you very much for watching this lecture. Have a nice life.